Hello everyone, George DeSantis here with a look at the market for the week ending Friday, July 5th, 2019. I haven't done this in a couple of weeks, so let's begin. Before we get to the charts though, as usual, take a look at the disclaimer and be aware of the fact that I'm not a licensed professional investment advisor. So this is simply an attempt to take a look at the charts for my own purposes and share it with others if they care to do so. Let's begin then, as we usually do, with a weekly chart of the S&P 500 to get a broad picture of the market. So here's a weekly chart of the S&P 500, and this is one we usually look at. So the first thing we should notice is where the moving averages are relative to each other. So you can see the shorter term averages are above the longer term. The 4 EMA is above the 9 EMA, which is the red line. The 4 is the yellow line. And that 9 is above the 30 weighted moving average. And that is above the 50 week moving average. So as far as moving averages are concerned, we are in an uptrend, as we can notice just by inspecting prices, right? The price bars. Second thing is that confirming the uptrend, we have parabolic continuing to remain below the price bars, and the parabolic signals whether the trend is going to reverse or not. For example, the trend reversed here and it reversed again here. It's called parabolic stop and reverse. Right now, continuation of the uptrend. The other thing about a parabolic we should note is that the upper Bollinger Band, or the not the parabolic, the upper Bollinger Band, the upper Bollinger Band is being hit by the last week's bar. So it is possible and likely, perhaps, we will get a bit of a pullback because 2 standard deviations is way above the mean, you know. And the yellow line is 3 standard deviations away from the mean or the average. Now, so those are the indications here. We have a bullish scenario. And the other thing is the Bollinger Bands have now been in a squeeze. They've gone into somewhat of a squeeze here. And usually, as you've heard me say before, when we go into a squeeze, we usually, because it means less volatility, we are likely to get more of an expansion of volatility, but that and the movement of price bars one way or the other doesn't really predict whether we'll go up or down from here. But the likelihood is that we will continue this uptrend here, in my opinion, anyway. MACD histogram, though, shows us a different picture. MACD histogram at this point in time is indicating a divergence from price, so that if we did this, okay, we see that prices are making a new high, prices making a new high, MACD is making a low high. Now this could be averted if in fact price continues to go up and MACD histogram makes a higher high than this one here, then we negate the whole idea of this bearish divergence. So only time will tell, you see. Now RSI 12 is still above the 40% line, the yellow line, and when we go down to Williams percent R continues to track above that magenta line, which is bullish, and the sum of the rate of change indicators remains above 4%. So the weekly chart is looking still pretty bullish, with one caveat here, and that is that there is a bearish divergence, a possible bearish divergence of MACD, which could be averted if we continue to go much higher, and we hope so, of course. Let's look at the daily chart. So on the daily chart, what we're seeing is that the price bar on Thursday hit the upper Bollinger Band with 2 standard deviations, and so on Friday it pulled back a bit, not by very much, but we pulled back a bit here on Friday, of course, as everyone knows. Now we still have the parabolic below the most recent bars, these last 4 bars, so it isn't indicating here, the parabolic is not indicating that we should reverse or think of this trend being reversed here at all. Now MACD histogram continues to remain above the 0 line, which is bullish, and there is really no divergence. There is no classic divergence here of MACD, because we would have to see red bars here, red histogram bars here, for it to be a classic divergence at this time. RSI 12 is above the 60% line. Williams percent R is bullish, and also the some of the rate of change indicator is bullish. So all in all, the scenario looks pretty bullish right now, except for the fact that we may see a little bit of a correction because of the divergence we saw on the weekly chart, and the fact that we hit the 2 standard deviation upper Bollinger Band. Let me just sound another little note of caution here. In Barron's this current weekend, we see a divergence of the Dow Industrials and the transports. Transports are making low high while the Dow is making high high. So according to Dow theory, as I understand it, this is not a good picture for the trend. We should have confirmation of the transports, but we are not having it here. As far as the put call ratio is concerned, put call ratio is remaining pretty low, showing that there is less fear in the market right now. So that's what I wanted to point that out. I will always look for what can go wrong here, and something that might curb our enthusiasm. So the next thing I'd like to look at is the stockcharts.com chart of the new high, new low index. And so you can see here that the new high, new low index, when we went down last May, from May to June, okay, you can see how the index dropped. Right now we're above 0, and we're continuing to trend higher. So that's very bullish. Here's a chart of the S&P with the impulse indicator, red, green, and blue. We have a blue bar as of Friday. If we look at a weekly chart, we'll see what we get. Let's update it. We probably have a green bar. So on a weekly chart, we have green bars, and what the green bars are telling us is we ought not to be shorting this market. If anything, we should be buying it or holding what we have. And here's a chart we've seen before. It's the percentage of stocks that are of the S&P 100 that are above their 200-day moving average. And you can see it's remaining pretty high here. So it confirms all the bullishness that we've been seeing. So that was a general picture of the market, but now we want to take a look at some individual stocks. On Shaken Analytics, they allow me to use the software here. I got permission from them. Here's a list of stocks that I either own or did own, and I trade the stocks mostly. I don't hold them forever. And so here's a list that you might want to take a look at. Adobe, for example, you could see that it was oversold and it's ticking up. Okay. Cadence Design, similarly, it was oversold and it's now ticking up. Many of these stocks were overbought, and then they became oversold within the last week or so. So you see similar thing here. It oversold, ticking up, right? iPay I like very much. I do still own that one. I own Cadence Design too. Synopsys, you could see a very similar pattern. Most of these stocks are now looking very similar. From an oversold region, they're moving up, except for Friday, which is why you see a lot of red percentages here. XLK is that ETF of technology, and you can see a similar thing here. Now let's switch over to using Best Choice. I want to show you something there. So this is Best Choice software. You've seen me use this in the past. I haven't been using it much recently, not in the video, but on my own. And let me show you what I've been doing with it. I take the stocks that I own, and I want to be sure that I'm buying stocks that have low volatility, in addition to meeting all those other criteria from Shaken Analytics. So if the stock is oversold and meets all those other criteria, I want to know that it's a stock that these bands are narrow. So compare this iPay with Micron, and you'll see what I mean. There's a lot of volatility here in Micron, from the upper band to the lower band. So I wouldn't want to be owning this and going through all that volatility. So let's take a look at some of those stocks we just began to look at. I'll go through them with you. So I showed you iPay, which is the ETF of payment systems, Visa, MasterCard, American Express, etc. And now I'm showing you PayPal. See how nicely these lines are compact? They're very, very tightly packed against each other. That's what I want. I want this so that I'm going to be able to hold it for a certain period of time, especially if I have this low volatility here as compared with, Micron, as I showed you before. Let's take a look at another one. How about Microsoft? Here's Microsoft, very similar thing, see? And the price growth is also indicated here as very good. Price growth is 81% for the year. CDNS, which is Cadence Design. Not as tightly packed, but still price growth 158%, earnings growth 53%. And let's look at Visa. And you can see a similar thing here with Visa. These are all looking very nice. These are the kinds of stocks I want to own that I don't have to worry about it overnight, especially if I'm going to own 1,000, 2,000 or 3,000 shares, because I like this low volatility. Let's look at another one. That's MasterCard. Let's look at another one. Apple. Well, Apple's had some volatility and it's trending up again. You see, the bands are further apart and came down here in June. In May. Synopsys, SNPS, I believe it is. Yes, Synopsys. You can see the bands are pretty tightly packed, and price growth is good, although the earnings growth is not tremendous. But I like the chart anyway. Here's Adobe. Adobe, not too bad. Still looking pretty good. Pretty close together, right? How about now? That's an IBD recommended stock. You can see it's pretty tightly packed. The very little volatility compared to some other stocks, How about AMD? See, pretty tightly packed. That's Advanced Micro Devices. And Paycom, P-A-Y-C, I think it is. See, same thing here. I just wanted to point that out to you because in selecting the stock that I want to buy and hold for a reasonable period of time, not just a swing trade, these are the kinds of stocks I want to own. Let's look at Etsy. We haven't looked at that in a while. You see, Etsy has some volatility, but interesting thing to note here, it's just bullish. Earnings growth is a rate of 173%, whereas price growth is 45%. So the price is likely to catch up to earnings. In other words, if earnings are growing at this rate, you could see the angle of ascent here on the green line, earnings line, and price growth is likely to move up to match that rate of growth of earnings. Okay, I think we're going to call it a night here, and I hope you had a wonderful 4th of July holiday, and I'm sort of back in business. I took a hiatus for a couple of weeks, but I never sold all my stocks. I sold a couple of them, took a short loss in some cases and gains in some cases. Have a good day. Bye-bye.